Hello, we are welcome back to another market review for the week ended May 22nd. My name is Ambrose Omodion. I will tell you that for the week we are under review that the market performed extremely bullish. It was really a good market for any class of investor, long term, short term, and for retirees. Why? Many all stocks were looking up. I will tell you all, especially those in banking stocks, industrial sector, and a few in consumer goods, and why others in service sector looked up during the period. Don't forget the healthcare sector. All are on the uptrend. And also, it's a week that I will tell you that more than 10 stocks made another new high, new 52 weeks high. It tells you how bullish this week, last week was. But for me, as this market is looking up, it's also call for caution, serious caution. I will tell you, market has broken out from the bearish channel seriously. If you look at this trend here, at the same time, market has also formed a weekly V shape, which is good. It tells that the market is really bullish. But when you see this V shape in a recovery market, it is expected, but it's also a time for both traders and investors should also be very cautious. Why did I say so? Market on the weekly chart is still good, looking up on a weekly chart, looking up, still have some gaps to cover. If you look at where this the March decline, this long bar here is for the month of March. You can see that market is almost recovering what it lost in March and the early April, and market is almost recovering. Or you can see that you have just little bit to touch the 100% Fibonacci after it had broken out 161.8 Fibonacci on uptrend retracement. It tells you that the market is really bullish. But at this point, I told you earlier the factors that are behind this oil rally. You remember when we are reviewing the market in April, I gave you a forecast that the month of May will not go the way as it is to be, or the way the mantra of sell in May and come back in October has always been in the matured market. For our market is quite different, and also the ongoing economic reset and the virus impact on the economy has changed a lot of things in the market. As the regulator has given the listed company another 2 months forward to release their results, knowing that I said earlier that in the first month of the year we saw Q4 numbers for many companies, and who wanted to send the confusion in the market. But then when the issue of the virus came, the regulator gave the listed company another 2 months apart from the March end for full year ended 2019 December 31st. That means they have April and May to release the result because of the lockdown and all. And this has extended expectation to the month of May. And mark you that the global reset, that the crude oil price also that have touched 21 years low. If you remember that it's like there's no storage facility again, because there was too much supply, no demand, because nearly the global economy was on a lockdown. There was no activities on the street, and who is consuming oil? Nobody. But I will tell you, gradual easing of this lockdown has also, as at the same time, the OPEC and the East Alliance has agreed also to cut production. It has also supported the crude oil to recover for almost straight 4 weeks now. That alone has changed the fundamentals of many market, or the sentiment behind many markets globally and ours. Look at what is happening in mature economy. Stocks are going up while the number of deaths are on the increase. Even the economy is sinking, but the stock market is up. Also, don't forget that in the stock market, there also that suffer first when the spread become something else. Stock market in 1 month lost more than 30% just because of the spread of this virus. It hit the market most than every other at the beginning, but now the market is on its recovery, serious recovery. whereas the economy is still dragging feet, and many sectors has been many sectors have been grounded because of the virus. But it tells you that now it is time for you to be cautious. Why? Because this economy that is grounded already, this economy that is dragging feet, the economy downturn, is going to reflect on the stock. The stock market cannot work in isolation. It can't take, you can say it because a long time now, for over 2 months now, the market has been up, but it can't be for a long time because what? The fundamentals are weak. But as an investor, yes, we take advantage of this rally to make money. As you are taking already, you have to be very cautious. You have to play with what? With a lot of commitment to see what is happening in the market, a lot of skill, a lot of knowledge, a lot of insight to remain in profit, so that what we have gained in these last 2 months, April and May, will not just go down the rate again. That is why you need to know how to set your stop loss. You need to have a good exit strategy in anything you are doing. And at this point, where this is the time for you to play what we call very short time, very, very short time. Don't think any long time at this point, because many of the stocks on the exchange are highly overpriced. Looking where the market is coming from, market that have touched as low as 20,699 index, now almost at 25. Markets are recovered almost 5,000 within just 2 months. It tells you what a loss in a month and few days. In 2 months, it's almost trying to recover, or it tells you that market is already at its peak. That means you as an investor, there are some stocks you can still hold. Those stocks that are still yet to, if you're a dividend paying investor, those are yet to mark down, can still. But if you're a trader, I will tell you this is the time to exit the market. Especially those banking stocks has become something else. They've gone high that even when they start releasing the second quarter, the market will treat these banks the way they are, because they have to adjust. Now to speak now, PE ratios are very high for the market and for different sectors, especially the banking sector. Their PE ratio is high. That means correction is underway. Correction is imminent. All you need to do, adjust your position in that sector and hold cash and play other sector. Like what I said earlier, I'll still repeat here. If you have not gotten the video for how to reposition your portfolio, how to realign your portfolio for the changing market dynamics and the recession, is the time to do it, because the market is going to pull back. And as it pull back, there are some sectors and some individual stock that you can position, that when the results start coming, as results start coming, others will be going down while others few will be going up. You will be in those stocks. You need to get the video. It's very, very important for your own education and for your own portfolio, because in Invest Data, our own is to tell you, our own is to guide you, and our own is also to open your eyes. It's for you to take decision. Yes, this is your hard-earned money, and you won't open your eyes and see this money going down the drain. What you just do, take time, watch these videos, call your broker. This is what to do. You are the one trading at home from your system. Adjust your portfolio. Get ready for this, because it's coming. It's coming. Definitely. Why is it coming? Once they start reading the Q2 number, knowing that what happened globally, it's not only Nigeria. During this month of March and May is just recovering. They are just easing it. The economy has not started operating fully in different parts of the world. They are still trying to manage the release of the lockdown gradually. That means we have not gotten full economic activities, but oil price has remained in the up direction. That means a lot of activities is just coming up, and this is the end of May already, and you don't expect for June for a company to recover all they have not done or all they have lost in the month of April and May, and for them to give you fantastic. Yes, there are some companies that are exceptional because of the nature of their service. They are still going to post good numbers, and that is why you need to get the video and realign your portfolio in that perspective, in that line. That at the end, when results are coming, those that are big markets are reacting to them negatively, they have some markets reacting positively because of what? Because of their number. And you need to get the video. Yes, this is a weekly chart we have just seen now, and I just know that you can see that this is an uptrend. And also the good thing that the index movement is almost touching 21 days moving average, which is good. A cross of this average will also confirm a bull run. And also market breaking out this bearish channel down is also telling you that the market is really bullish. Don't forget that the long bullish for 3 years long bearish trend, which is this, market has broken out at this point. Then it came down under it. Now market has broken down and also going. The short one is also market has broken out. This breaker tells you that market is going somewhere, but on this going somewhere, it won't last. I'm telling you, I said it last time, that market cannot recover all to this without going back. There must be pullback. Yes, it's normal for market to recover in this trend, but there's always be correction. You can see little correction, but there will be a major correction before we can see a bull run. Which that bull run we're expecting to come toward the end of the last quarter of the year and usher us into 2021. That's why I'm telling you that if you're a long-term investor, it's the time for you to keep cash. I said it last time. If you have fund in your pension fund, these are the time for you to start telling your pension manager, hold cash for me. Why? When you are entering that long bullish run, it's going to give you return that even your other investment window will not give you in the next 5 years. You can make such return under 1 year or under 3 months or 6 months of bull run. And that bull run is coming because the global reset and reset is also coming down to Nigeria. Our economy is also going to be reset. I'm telling you, it's already on resetting. Why? Things are going to change. And still changing, there are some sectors that will start opening opportunity for investors. There are sectors, industry that investors should also be running away from because of what? The reset in the economy. You need to open your eyes. These are your hard-earned money and you need to invest them wisely. You need to invest them wisely. You are in the market to make money. And that's why they always keep cash. Why they keep cash? In every situation, there is opportunity. When you say market is going up and you are not involved, you are not trading, you are not investing, you only hear with your ears and you are not partaking. That is why keep cash so that inside the market flow, you have cash to play along. Because even at this market is going up, not all equities are giving money. Not all equities are rallying. Not all equities are on the uptrend. That means you need to know those stocks that you should be in. And when it is a bear market, I'm telling you, many stocks suffer losses. You need to prepare yourself. You need to prepare yourself. Both the good and the bad will suffer losses when it's a bearish trend. I always say that market trend have 70% influence on the general market performance. If there is a bearish trend, most stocks will be down. If there's a bullish trend, most stocks will be up. If you have this principle, it will go a long way to guide you. And that is why I said earnings is very important. After the general market liquidity sector, another factor that really supports companies' performance is their earnings. Earnings capacity of a company is very, very key because this is what comes quarterly. You are sure that this thing will come to influence price, and when they are negative, it's going to influence price negatively. When they are positive, it's going to impact the prices positively. You as an investor know how to invest with this earnings, and this is the fundamental of the companies and the fundamental of the economy. When these fundamentals are opposite the technical, the market rally will not last. This divergence was seen from the economy and the market. I'm telling you, it will take a long time. Market will go in for it. Yes, we said market is a leading indicator. We agree. Now, we'll see what is happening. The market is up and the fundamental is still down. I'm telling you, market will respond to it. Yes, market are giving us sign for almost 3 years now. Okay, let's say 2 years, and that market has been on the trend, which we expect that 2020 will be a bullish year. But because of events that was not even factored into all the analysis, all the forecast, all the outlook for 2020 came around now to put the market in a red situation. But yes, the market is on a recovery now. But this recovery is a very short time. It's for a very short time. It won't last. It will still give way. For that, as an investor, prepare yourself that now that the market is on this recovery, okay, let me recover my few losses and cut some and hold cash to position for the long recovery that will come towards the end of the year, which is the last quarter of the year. Yes, I've showed you this is a weekly chart, but if you go to a daily time frame, look at the market. The market is almost on a strong bullish run. You can see that market has broken out different level of resistance on a daily chart. You can see on a daily chart, markets are breaking different resistance level, still looking up. It tells you that the market is bullish, even above all the moving average, 20 moving average, 50 moving average. I can see the market is bullish. But I will tell you, when we look at this chart at this point, look at this money flow index for a daily chart. You see it has come down, but now on the recovery. This for a daily chart on the money flow index. It tells that money is still entering the market on a daily basis. If you go back to a weekly chart, this is the weekly chart for money flow. You see that it's still low and still recovering. Money flow that is feeding almost 82.9 something for weekly, for daily, is now at just 32.98. This is what is reading for weekly. Then that some is just entering this this market on a weekly. That means that there's still room for market to rally on a weekly basis. That tells you that now for longer term, because market have suffered a long bearish downtrend, for now, even at this point, it's look attractive for you to position on the long run because of what prices are relatively low. But on the short run, these prices are what are high. That means until there's correction for wise investors, for those that are just investing, they must say, oh, the prices are still low. GDP was selling for 38 naira, now selling for 24 or 23. It's still attractive. No, market dynamic has changed. For market, you have to factor that change in market dynamics in your decision, so that you won't just be buying at the end. The market will crash on your head again. Now you have seen prices at this point. No, you need to still hold on. Look at where we are seeing the money flow on the weekly. It's still okay. It's not up to 50, but still moving up. Right from the time it turned up around the 16 to 14 point, and you can see that it's going up since over like 2 to 3 weeks now on the uptrend, which is good. But if you look at your RSI or this MACD at this point for a weekly chart has crossed each other from bottom, and not only that, MACD have crossed the signal line to a bullish trend on a weekly basis. And also, if you look at this MACD on a daily chart, you can see that MACD is bullish. You see that it has been on a bullish run from here to here. It tells you that the market is still bullish on a daily, but you have to be very careful. You can see it's almost coming down before these few days rally in this week. This week that we are just reviewing, you can see the part of this week on daily chart that nearly for the 5 days, you can see that it was a little reversal after the histogram was coming down. You had to make an uptrend. Looking at the MACD has crossed the green one from down. Look at this, a long bullish run for a daily chart. You can see it, the MACD here. Also, you look at MACD here on a monthly time frame. If you look at MACD on a monthly time frame, it's just about to come up. It's a sign that there is still room for market to run on a long run. But because of the market changing market dynamic, if you look at these two weekly and the monthly time frame, the market look very good to buy now, even for trader. But I'm telling you that nearly more than 80% of players in the market are short-term players. This chart now, this monthly, I'm giving you a sign that there's opportunity for the market to rally. But I'm telling you that market activities, market sentiment, market forces will change very soon, because everybody is looking at the daily chart that is really at overbought region. That means the correction is underway. Prices will soon change. For that, your weekly and your monthly chart are attractive for you to buy, but our advice is still hold on, because the correction is already underway. If you look at your relative strength index on the monthly chart, it's just about 41.16, which is good, and it tells you that stocks are still on the value oversold, because it has not crossed 50. Yes, there's a recovering already. Actually, they say there is strength coming back to the market at this point. If you remember this month of January, see where the MACD got on the after 31st on the month of January on MACD on RSI. You see, but now it's almost at the same continent 41. It got here at 50 at 44. And the market reverse. Now it's already at 41. You have to be very careful. You can see it's already at 41. If market in January go to, you can see, look at this one, it's already also this was as at May 31st. You can see that this trend, we need to also be very careful. We need to very careful. We need to watch. But yes, it's a room for uptrend, but you need to talk. These are longer time frame. If you also look at your MACD, I showed you on it, is still looking at. On this note, you need to be very careful. For the week under review as well, still on it. For the market gained 5.59, which is huge. I will tell you, the market is really moving on the uptrend. If you look at this trend here, you can see market was up forward by 5.59%, gaining about 1,333.42 points for just 1 week. Market broke two strong psychological line to 24,000 and 25,000 just on the uptrend, it tells you at this point that market is likely to slow down. Also, if you go back and look at this I've showed you this already, but let's go to another indicator to look at. If you look at these indicators, look at them, all of them. You can see that the buy and the buy volume and the sell volume are reading 100% and 100% buy volume and 0 sell volume. It tells you there is demand on a weekly basis, but this demand, I'm telling you, will soon disappear from the market. Why? Because investors will be taking what? They'll be taking profit. Why? Because they have made money for this period. You as an investor or trader should not jump in at this time. You only own few stocks, and any decision you are taking now should be for what? For a long I said for a long term. But don't take any decision you are taking now. As you are selling, you are keeping money for a long term. But if you are entering any position now, let it be for what? For a short term, for the very short term. And very short term, and it be on sector that you know that even when market go against you, are things that you can hold because of the sector where you are positioned. I said it earlier, you need to get this material, this video, and watch it. It's just about a 2 to 3 hours video, 6 videos, and the PDF is there to guide you to look at the PDF of this stock that you have to position and why you are positioning on them. You need to get that video. I know that as the month of May is closing positive, we're expecting that the month of June and July will be the month of oscillation and correction. Why July? When the results are coming, but I know that many investors and many smart traders will start factoring the results they are expecting in July, in June, and that means correction will start gradually in the month of what? In the month of June. Now that we have seen that April was up and May is also closing in green. After this 2 month rally, as you have seen in this chart, after this 2 months rally, look at it here. After this 2 months rally, you can see the rally. We expect that there will be what? A little pullback. Then market will have recovered what it lost in the month of March. You can see that this March was a long bar. You can see if February was there. This was the month of March when the market, month of January when the market gained. And you can see the trend now. You can see the trend. See, and for the monthly, from the monthly chart, yes, we're still having 100%, but there's demand for it. But you have to look at this trend here, this chart here. See, it's an uptrend for 2 months, and we expect that after the month of May have closed green, there will be little correction in the month of what? The month of June, and that correction will extend when they start seeing numbers, and that numbers will bring stocks that are highly overpriced at this point down to reflect the position of the companies and the position of their earning capacity. That is why I need to prepare these earnings for you to learn how to use earnings to invest. It's very, very key. I know by the next week this material will be out. You need to have it before the earning season for second quarter start in July. You will see this earning material, this video on earnings to guide you what to do and how to take simple analysis of this earnings. The simple way to analyze, you must not be a chartered accountant, you must not be a CFA holder, you must not be a stockbroker, you must not be a chartered taxation, you must not be all this chartered, but a simple way to use earnings to take decision. What is important in earnings that you look at as an investor. Once you get this thing, I'm telling you, you see that you can trade earnings season and make money. That is the most important thing. Now that we are entering a bearish market between now and the last quarter of the year, how can you trade earnings season between now and that end of the year, and even going forward? Because you have to learn how to trade earnings. Whether the market is bullish, the market is bearish, earnings count. Since earnings count, you need to position and know how to use these earnings to take a decision and also to profit from any season at any season of the market. Any season at the downtown, any season at uptime, you need to understand how to play with these earnings. Once these videos are ready, I will put you to the market. You get it. Once you have it, look at it. And I know that as you are going through the video for how to reposition your portfolio for the changing market dynamics and recession ahead, or even recession already, because if you look at the inflation figure for the month of April, it's like it's not looking good. It's telling you that things are not all right for inflation to move from 12.26 to 12.34. Things are not orderly good. Things are looking up. Why? Prices are looking up, while people earning capacity are on the downturn. You need to also look at that. How long will you be in this situation? It's going to correct. Market will reflect to it, and it's going to reflect on the numbers of what quoted companies. Not only that, in the life of Nigerians, it is when you have that you can buy more. When the people are buying, your goods will be leaving the shelf. But when people are not buying, your goods will remain on the shelf. The warehouse also will also be filled up, because the one on the shelf is not going for them to reorder to leave the warehouse. All this is going to slow down the economy and going to impact on the company's numbers. For that, investors have to be very careful. For the week under review, as usual, last week we saw Unilever on the top. Also this week, Unilever have maintained that trend. But I will tell you, at this point now, if you are in Unilever, this is the time for you to bail out, because the second quarter number now of Unilever, yes, it might not, the volume of loss will not be as high as it is in first quarter. It will reduce, but I'm still going to post red or a decline finger. It's going to pull back the price again. If you want to position in Unilever, yes, you know the sector it operates, you need to wait. For if you have made money in Unilever, this is the time for you to sell off. The next stock on that was the Resta. You know why Resta is there? Resta gained almost 26.68% as at the end of 22nd May trading, and it tells you because there's expectation, something's ahead. That is what is pushing the stock of Resta. Resta is a company that have been consistent in dividend payment. It's a company that paid 40 kobo before the last 43 kobo. Now I know that Resta has just enlarged their share through right issue, and the possibility of them to pay that 40 kobo is high. It's low, but I think with relative to their price, expect a good dividend for them, because they have what we call equalization policy, dividend equalization policy. That means they want to pay good dividend, they want to repay, but because of their large share capital, I don't expect them to pay that around that 43 kobo they did in the previous year. We can expect something in the range of 35 to 40 or 35 or 30 to 35. But I'm telling you, you still get good dividend from Resta. Resta is also going to benefit from this citizen we're having, because they are going into another food logistic business, and which they are set and they are already on it. For that, this Resta, if you are there, you can still hold. For those that have short term, you can take your profit. A pullback will be there. For those that are buying for dividend income, you can still take position. But I'm telling you, know that March is their year end, and March results will start coming from the month of June, which is the month you are entering, the month of June to around that July again or August, will be seeing them. That is why how long you're going to stay, how long you're going to stay, you don't know, because the whole thing has changed. And it's expected that NSE that gave the March December account 2 months extension, more likely to give this March account another 2 months. That means at the end of June, they have about July and August. That means not till August to release the results. For that, you should also plan your investment in this kind of stock, especially those that have March at their year end. And I think I've shared it on the WhatsApp. Those that have their March year end, I've still paid those companies. We have stock like Flower May, Honeywell, University Press, Learn Africa, this Resta. These are March account that we're expecting the result in the month of June, because the rules in exchange that after your financial year end, you have 90 days to release the full year result to the market, which is for those in March. Now March, April, May, June, ideally they have to release the results by June, but because of the extension they're giving those in December account, I expect that they also give extension to this one to around that August. But this will guide you what to do at this time. And also they expected also to release the last quarter. That means at the end of this June, we expect them to in July quickly or to release, to give us an unaudited full year. That unaudited full year is what we expected them to have done for the month of most of them did not release unaudited. If those account for March, they didn't release unaudited account for their last fourth quarter, as those in the December year account did in January. And they didn't release their own, but ideally once their year end was March, is what are giving us their unaudited fourth quarter in April. But most of them did not release. That means we are still having only their third quarter to have insight of what they expected and their performance in 2019. But we'll see that these companies, some of them still have fundamentals that will drive their price, but because of the extension, all you just do, if you are positioning this kind of stock, you'll be looking at ideally all the results should be market in June, but because of the expected extension to around August, that means if you are positioning, you can go in and out watching the market. This is time for you to keep your eyes on the market. Be one of the watchers, not just invest and go and sleep. You can see, as I said earlier, after these 2 months of rally, April and May, we expect a correction to start in the month of June as people start factoring what they expected Q2 results in the month of July and August. Thank you.